Over the last 2 years, Santa Barbara real estate has gotten more valuable and more sought after than ever before. The demand has skyrocketed. Inventory really hasn't gone anywhere other than down. And well, that's led to the best prices we've ever had for sellers and most buyers being pushed out of the market, especially with the way that interest rates have gone in the last 6 to 9 months. Now, virtually our market has screeched to a halt in many cases. And that's exactly what we're going to go over in this video. My name is Alexander Stober. I'm a realtor partner with Zia Group in Santa Barbara. And in this video, we're going to go over the October market results and look at what we have seen so far this year so that we can give you the best information possible. Before we get into it, please like, subscribe, and hit the bell for notifications for future videos. Let's get into it. What you should know, first of all, is that in the last 2 years, we saw quite the climb from 2019. We're going up pretty much over the last 13 years. We have just been on an incline, and it's been great for buyers and great for sellers mostly, and people who bought down here, around 2011 and 2012. That was the bottom of the Santa Barbara real estate market. And since then, we have just been going up steadily. We thought, people were telling me, 2019, we can't go up bigger than this. We can't go up higher than this. It's already been crazy. And then boom, things happen in our global, economy and global health. And here we go. Now people want more space in their backyard. They want more neighborhood qualities. They want quieter areas. They want lower crime rates. And Santa Barbara is great for that. So we saw the overall value go up quite a lot, and we are just seeing this huge rise, very similar to this rise right over here from 2003, 2004, 2005. And now what experts are saying is that we are going to see something like this, very similar trend in Santa Barbara, where we see a leveling off. Right now we're seeing that the overall appreciation in the market is closer to about 8% so far. So let me just show you that graph, and we'll get down to the nitty gritty of exactly what's going on month over month. So let's take a look at September or October data here. So right here, you'll see that our overall price increase for October, we've gone up 34% month over month. And that has led to, quite a bit of appreciation for the last year. This last year, our appreciation's been 8% this year versus 24% last year. And now what we're seeing here is that months of inventory is actually increasing. So months of inventory means the absorption rate of the market. So what we're currently seeing is that the amount of listings over buyers is going up. So there's more buyers or less buyers in the market, and there's a stable amount of inventory that hasn't been increasing. We actually have seen a 37% decrease year over year in Santa Barbara, and it's been definitely very small. 85 new listings coming on the market in the last month has been really rough, especially for buyers. But at the same time, we're seeing our sold homes going decreasing as well. So homes are coming on the market. We're having a 39% increase in days on market. So the average home is selling in 25 days now versus it was like 9 days at one point, 10 days this year. And in the heat of the market, it was at 10 days. And that's even with luxury properties, homes. This is just the average sales price is 3.4 million right now in the last month that have sold. And those homes typically in other markets were staying on the market for a lot longer. It wasn't even a far-fetched idea to have 60 days on market. And now they're selling in 25, which is still an increase, but 10 days was just so small in the past. And now buyers are actually getting time to be picky and looking at the inventory and not needing to put offers on all cash, no contingencies, close in 7 days anymore. They can actually be a little bit more choosy. They have a lot more leverage in this market than they ever have before. Interest rates are now at 7% at the recording of this video, and that is giving us more homes sitting on the market and a higher amount of absorption rate. So as months of inventory goes up, we're at about 1.5 months right now. The lowest we got to was about a half a month, and that, or maybe even a third of a month. And that meant that there was really no no leverage at all for buyers, and they had to just close right away, all contingencies, cash close, and really didn't do many inspections. But now with this increasing, we are seeing a trend towards a more balanced market, which would be about 6 months of inventory. At 6 months of inventory, that's when you'll see it balances out. There's really like one buyer for one house, whereas right now we're still seeing multiple buyers for one house because there just aren't a lot of listings on the market. In order for this to change, in order for us to see more balanced market, we'd have to see, I don't know, twice as many or half as many buyers in the market right now as there are right now. I mean, even probably more than that. I mean, you would need like a sixth of the amount of buyers in the market for us to get to 6 months of inventory. And once we go over 6 months of inventory, that's when we'll start to see price corrections. Actually, in the last month, we have seen more price reductions, which doesn't necessarily mean actually that there's a depreciation in the market. It just means that market's much slower now and that we are seeing that buyers are taking their time to purchase. And that means that sellers aren't getting the urgency that they're looking for, so they're not getting as many buyers to the table. And when you have one cookie and 15 kids fighting for it, you're going to have a lot more of a frenzy than if you have 5 kids looking for the same cookie and bidding it up with their allowance. So in this market right now, what we're seeing is that is not happening. And because of that, we are seeing price reductions and buyers or sellers getting more realistic about this market, and just the most motivated buyers are in the market now. We've seen a big decrease in the amount of investors that are looking for rental properties with these interest rates because the leverage just doesn't make sense as much as it has in the past. And until we get more inventory and we see prices drop, then we're probably going to see a little bit more of a slowdown like this, unless there's a big catalyst for people to sell or for buyers to want to buy even at these market conditions. So these are the single family home stats. Down here, we'll see the county condos, the stats there. So we'll see a 44% decrease in new listings there. There's only 32 condos in Santa Barbara, in South Santa Barbara County for the last month. There were 27 sold listings, so there's a 33% decrease. 23% decrease in condos for sale total. We have a 1.175 average sales price, which is a 23% decrease. Looks like we had some really high-end condos sell in the last month, and that's why this price decreased. There's, Montecito condos can go for 4 or 5 million, especially on the ocean. So that would push down this average sales price. And then 20 days on market on average is a 43% increase. So they are sitting on the market for much longer now in the condos space. And then there is more months of inventory going up. So there's an increase. And then in Montecito and Hope Ranch, what we're seeing is that there was a 38% decrease in new listings, 21 new sold listings, so 53% increase in sold listings, which is great. There's more buyer demand in Montecito and Hope Ranch, it looks like, with 73 homes for sale, so it's a 13% decrease, 62% increase in overall average sales price. So between Montecito and Hope Ranch, we're looking at a $7,667,000 average sales price, 62% increase. Of course, this is basing it off of month-over-month trends, so it's not year-over-year with this, but what you'll see here is that the average days on market has increased to 5% increase to 20 days on market. And we have 2.6 months of inventory, which is a 53% increase. Because there were all the Montecito and Hope Ranch properties were being bought up really quickly in the past, and now that has slowed down quite a bit. So what you can see over here is that there's an 11% increase in year-to-date sales price. Now we're at 11% because our average sales price has gone up in the last month, and we're also seeing a $2.2 million median sales price, which is an 11% increase. And then you'll see that there is a sold volume of $2.6 billion so far this year, which is a 26% decrease over last year. So even at $2.6 billion in Santa Barbara, on the amount of homes that have total sold, we are still down when it comes to overall sold volume, and the market's definitely feeling that. And then we're seeing a $1.2 million average sales price for condos in the area and a $960,000 median sales price with a 17% increase and $358 million in sold volume, which is a 17% decrease overall. Those are the stats for Santa Barbara right now. That's your monthly market update. So if you have any questions about what's going on in Montecito or any neighborhoods specifically, I can drill into those and give you up-to-date data on those neighborhoods. If you have any questions about where the market may be going, more details on the graphs that I was showing you, I'd love to talk to you more about that. Please feel free to drop a comment. Let me know what you thought about this video. And once again, please like, subscribe, and hit the bell for notifications for future videos. Have a good day. Bye.